Hello nieces, hello nephews, this your Uncle Charters, and today the Bulls have dropped the balls. The balls? Yeah, they failed today. And when I say they failed, they didn't hold the 200-day moving average. Okay, they failed to hold the 200-day moving average, didn't show follow through, and we're gonna talk about that. But first, here's the flow sentiment based on stocks only of the overall market and filter for 200K premiums or above. As you can see, it's still bullish, 59% more in the calls compared to puts, okay? 41% in the puts. All right? So there's that. And this is my Discord where I post my, the plan and the guide, stuff like that. And this morning, 7:08 a.m., here was my plan. I had a bull case scenario. If SPY opens above the 200-day moving average at 448, that is first support with price target at 450, 451.5, and so on. Bear case scenario. If SPY opens below 448 or loses 448, that is then resistant with 446.5 in play, then 444.5, and so on. Okay? Pretty straightforward. And remember, the strategy, you go long at support, you short at resistance. Okay? My nephew, the Charters, made an illustration for the process. If you want to go long, is it at support? No, don't buy. Yes, buy. You want to buy puts? Is it at resistance? No, don't buy. Yes, buy. Okay? Very simple strategy. Pretty straightforward. Now, as you can see here, this is a 15-minute chart. The SPY opened at 447.97. That means it opened below our 448 resistant level. That's this line right here. This light blue line. Okay? Make it thicker. All right? And as you can see, where it opened, it went and tested that level as a resistant and gave us a rejection. Rejection from resistant. This is why we buy puts from resistant. And then it pushed all the way down to this green line right here. That green line right there is the 446.5 support level. Came down, closed just a little below it, back tested it as a resistant, with a nice wash above, but pretty much pushed down to the low of 445.97. All right. So it's looking like it's going to go down more. However, next candle gave us a recapture. All right. A recapture means we just recaptured a previous level that was lost. In this case, we lost this 446.5 support level, and we recaptured here on the 10 o'clock 15-minute candle. Okay. The next candle showed follow through. It treated that level as a support and was able to close above, and then we got a push all the way above. So we got a false breakdown scenario right there. False breakdowns, remember, are bullish. Okay, got the confirmation, got the back test, got the confirmation. Now we recaptured it, and it pushed all the way up. And where did it go? The blue line, we stopped right there at first, but in the very next candle, 1045 candle, we busted right through. And where did it go? Above 448. My next price target was 450, and we hit it. Okay, we hit it, based a little bit just below, and then we got the breakout on the 1215 candle. This candle closed right at 450.42 with a high of 450.62. Okay, very next candle closed below it. Did not show follow through. That's a false breakout. Okay, next candle we broke above 450 again. However, you always got to wait for the back test. Always got to wait for the next candle to give us follow through. The next candle did not give us follow through. That's 2 times in a row. Okay? This is why I prefer we do not buy the breakout. I prefer we wait for the back test, because the back test will confirm if there's more upside. It requires more patience, but it lowers the risk. Okay? So basically, false breakout 2 times. All right? And what happens, just like a false breakdown is bullish, false breakouts are bearish. All right? These are price action stock trading concepts, guys. All right? You short from resistance. Boom. We lost that. And then we continue to come back down to the 448 support zone. All right, that's around where the 200-day moving average is. This one closed around 448.03. This one lost the level. This one recaptured it. Gave us a nice dead cat bounce. I had it bull flagging right here. From the 12:15 candle, connect to the 12:30 candle, to the 1 o'clock candle. And we got a nice rejection at the 3 o'clock candle and continue to get, you see all these wicks. All right, so we're in this bull flag. Remember, where do we short from? From resistant. Okay, if we got a breakout, what do we always do? We wait for the back test. Okay, did we get a breakout? No breakout. Okay, so no breakout, no back test. All we got was rejection from resistance, guys. Rejection from resistant. And as you can see, continue to push down for the rest of the day. All right. So, yeah, tricky. Pretty tricky trading type of day. No doubt. It was a very tricky week. Both bulls and bears, got tricked out. But if you followed the plan, if you stay true to the concept, if you ignore the noise, in theory should have been successful. But, everybody different and I don't know. Anyways, let's take a look at this daily chart, okay? So, as I said, the bulls, they pretty much dropped the ball. And what I mean is they lost the 200-day moving average, okay? We lost it here on the 6th, recaptured it, lost it again, okay? Are we having a deja vu effect here? Because look, there was times when we recaptured the 200-day moving average, when we lost it again, wasn't a good sign. Recaptured it again, only to lose it again, which led to more downside. Could that be the case here? All right? So I'm always going to play it level to level no matter what. Okay, right now we're below the 200-day moving average. That means we are bearish. All right, I'm not bearish because I hate the market or I want to be like Michael Burry. We're below the 200-day moving average. Bulls dropped the ball. Okay, so as long we are below the 200-day moving average, all right, and I say as long because there's always the chance that it changes. Okay, and I always want to be nimble in this market. Okay. But as long as it's below the 200-day moving average, we can go down and test more support levels. I have some support levels. Obviously, I said 446.5, 444.5. Okay? It's well tested around here many times. Around the low of March 23rd. All right? And then if that fails, 50-day moving average. Currently is at 441.63. All right? However, if we recapture that 200-day moving average, does this strategy always work? No, it doesn't. But I'm going to stay true to it no matter what. Because, for me at least, it works more often than it doesn't. Okay? But anyways, above 448, if we get back above the 200-day moving average, I don't know if it will. But if we do, I'm going to react accordingly. All right? And play it level to level. All right? Have 450 level. That was tested today and yesterday, and it served as a strong resistant level. Okay. Obviously, above that, I have the 453.5 level. All right. I don't have my fib levels out right now, but the 453.5 is the 61.8 retracement level. Okay. Right there. So we bounce off the 50% retracement level. We need to clear that 200-day moving average and go back and test that 61.8 retracement level. Clear that. That'll trigger more upside. Okay? So I'm only bullish if we get back above the 200-day moving average, currently at 448.14. My sentiment will stay bearish as long as we are below. Okay? If we take out that 50% retracement, it's at 445.4 to 444.5. Okay, that's a mouthful, I know. But we take out that level, we play level to level. That's bearish. Then the next support level of the 50-day moving average in play. Below that is 437 support level. My 38.2 retracement level. Okay. So we're just gonna, play it just like that. I'm gonna keep it that simple. All right, we gotta simplify the process. That's my recommendation. That's the uncle's recommendation. Okay. If you need me to repeat that, just rewind the video. Okay. But here's the VIX. The VIX, technically speaking, had a down day from yesterday. 20-day moving average and the 50-day is still sloping downwards. That 200-day moving average, however, currently at 20.82, is still holding strong as support. So VIX, if VIX is to be bearish, it needs to break that level and just head down lower. Okay? But that's a critical level we need to watch. Below that is bearish. Right now, I'm watching to see if it can break that 20-day moving average at 22.64. For 3 days in a row, it's been rejecting from that level. All right? And today as well. But we'll see. If it clears that, that's going to build some bullish momentum. All right? So as you can see here, for quite some time, VIX was dropping and it needed some time to breathe. Can't say it didn't get that time to breathe, okay? Now, we don't know if it's going to drop more. We don't know if it's going to go more upside. All we can do is play the levels. And all we can know for sure is that the level is 20.82 at 200-day moving average. That fails, more downside is likely incoming. As long as that holds, 22.64 is still in play. And then 23, the 23.6 retracement level will be in play. And if those clear, that is bullish. A bullish VIX, bearish SPY. Okay? So that's the SPY and that's the VIX. Here's QQQ. QQQ treated that 38.2 retracement level of 352.64 as a resistant. And it dropped below the 359.5 level, which was the 50-day moving average, okay? QQQ is just looking bearish. So SPY is losing the 200-day moving average. QQQ is losing the 50-day moving average and critical levels. For me to be bullish on QQQ, simply, it just needs to get back above 352.64. And then I will look for more upside, okay? 357, 360, 363.4, and so on. But as long as below, all right, as long as below, the next price target will be around 344 and then 339.3. Okay, that's for QQQ. Now, unlike QQQ, Dow Jones is not looking too bad. Okay, Dow Jones actually recaptured the 346 level. That's a very critical level as that's the 50% retracement level. Okay, so 346 needs to continue to hold to keep the 200-day moving average in play, which is at 350.29. That clears, that's bullish. And there's some levels of 351.64 and 353.75. Those are some critical levels, pretty close to each other. But I think as long as we hold 346, I favor that we break through those levels. Okay? I could be wrong, because if we lose 346, then I think more downside down to 340, then possibly lower down to 338. Okay? So, interesting. QQQ's looking bearish today and losing critical levels, while Dow Jones is gaining critical levels. I don't know if that's a sector rotation or what. All right, but IWM, okay, looking bearish. Okay, IWM starting to lose and close around this white trend line. Okay, that's been around since November. This white down trend line, and IWM is closing right at it. That's not ideal for bulls, because when at critical support levels like this, we want to see strong demand come in. We want to see strong buying pressure, and that's not what we're seeing with this close. Okay, that's very weak and pretty bearish. Okay, confirmation would be if we lose this yellow triangle trend line right here. Okay, so support is 197.5. Below that, that's a breakdown, and I'd be bearish. Okay, 191.7, then 188 in play. Apple, pretty bearish day for Apple, but managed to close above that 200-day, 20-day moving average some way, somehow. Okay, it's currently at 169.6. So now that it's tested that level and held, what the bulls need to do is step up, clear 170, all right, to put 173 to 174 in play for this gap fill over here, and then possibly go and clear 176.6. That's his white triangle excuse me, that's his white trend line that connects March 30 to April 4th and April 5th's high, okay? So if it breaks above that, that's bullish. That's a breakout. 183 is in play. All right? But if this 20-day moving average fails, it's currently at 169.6. If that fails, the next level is 166.77 of this blue trend line, okay? If that level fails, that's a false breakout of this blue trend line. All right? Very, very bearish if that fails. All right? So bulls need to step up by Monday. Usually when Fridays are weak, Mondays are pretty strong, but we'll see if that trend continues or not. All right? And we'll know as long as Apple's above 170 and above 169.6. Those are the two critical support levels right now. All right? Tesla. Oops, I'm looking at a 15-minute chart. Tesla lost a very critical level today. 1,036.43. That's a 61.8 retracement level. Not good for bulls at all. Watch the back test on Monday, okay? 136.43 is now resistant. If it opens below that, that's resistant. Watch for rejection there. If it rejects, that's bearish and a sign of more downside. Next price target is 972. If it back tests and then recaptures, that's bullish, okay? Gave us a false breakdown scenario. False breakdowns are bullish, okay, guys? And then, I mean, if we clear 1,036, 1,064, then 1,073, then 1,128 is back in play, okay? And Bitcoin just looking bearish, guys. Broke back down, false breakout mode, by the way, and back tested that triangle trend line right there, that yellow trend line as a resistance. So next support's at 41.7K at the 50-day moving average. And if it fails, nice big drop down to 36.6K. See if bulls can get a bounce from there. All right, that's all I got for you guys today. I hope you guys have a great weekend. It was a very tough trading week, very choppy, very tricky. But let's see if, next week will be a little easier and maybe we'll get a one trend move. Maybe. If not, then always remember to play it level to level. You short at resistance. You long from support. And remember, family is important and the Uncle Charters loves you. Have a good weekend.